If you sincerely enjoy my work and want to donate, feel free to use the PayPal link down below this video in the YouTube channel, or you can scan these QR codes. Thank you for joining me today. Hi, I'm B.R. Schultz. It is December 30th, near the end of the day, and I wanted to review the mid-range pivot model lows that at the end of November, that's what I set out to essentially do with the green wave. And so I just wanted to review that with you today and show you kind of how it set up and how it played out. And maybe some nuances that at the beginning were kind of fuzzy, what it meant, and then how the markets played out. So thank you for joining me today. Okay, so you might remember that the green wave was the original pivot model that I wanted to use for mid-range jumpers, and this was the 10-minute model that I believe I set out with one of them. I think this was the main objective of this green wave. And so you can see the 1, 2, 3, 4 count into roughly the 19th for the bottom, and that's when the markets hit their lowest point, right? Was on December the 19th. And then you can see the double peak in the green wave with the double fours there. And so that's what is interesting about the model, is with the double peak there in the green wave, it created like a 1, 2, 3, 4 on the second bump in the green wave, second crest in the green wave, and you can see that that traces out roughly into the December 30th time frame. So essentially that's how it played out. Markets sold off rather hard after the bottom around December 19th. It popped up prior to Christmas, and then after Christmas it sold off again. So that's how the model projected it. And then you can look at the stock market itself and see that we had two significant sell-offs into December 19th and then into the year end. And then hopefully we see that bump up into January 3rd for the model's next macro or mid-range macro peak. And that's only a few trading days away. Obviously we have tomorrow as a trading day, and then January 1st is closed. I believe only the futures is open. If that, maybe the futures isn't even open on, I don't know, on January 1st, but trading isn't. And so really we only have December 31st and then January 1st and 2nd. So about 2 to 3 trading days before the model's next swing high date of January 3rd, plus or minus 1 day. So yeah, but you can see here from the bottom model kind of how the model tries to or predict. I don't really know how to say that well. It tries to predict where the market bottoms are going to be, or how it syncs with the market's movement, or how the historical data in the model is predicting the future bottoms in the markets. You can zoom in there and see that's around December 30th, 31st. And seeing that I just built this mid-range macro model, bottom model, I'm still learning a little bit about it as well myself. So, but you can basically see how it was predicting another bottom, two major midterm bottoms around the 19th and then somewhere around the 30th, 31st, and then that pop for markets into January 3rd, and then I believe the bottom model is halfway decent. So again, I'll probably have to create another. Actually, you can see here, I don't have to talk about it the other way. The purple wave seems to be projecting with a 1, 2, 3 out to January 9th, 10th as a low. So again, probably leaning towards the 10th at this point for the next pivot low after the January 3rd high. I'll create another video hopefully with more short-term or short-range models. Actually, I don't think I have to, because I think I created that video for the January 9th low and it might shift out to January 10th is the bottom for the swing trade low. Obviously, I need to do a little bit better job of trying to figure out where every swing point is. I'm gonna miss some here and there. Unfortunately, I didn't call out a peak around pre-Christmas, and then at the end of the year a bottom. So I apologize for that. It's hard to get everything, but hopefully over time I get better and better at syncing all these different models, the bid range and the short term, the long term, things like that. So thank you for joining me. Obviously, the prescription was for a volatile market into March, sideways market into March, and a lower to sideways market into March from the end of November, early December high, and it seems that that's still going according to prescription or prescribed forecast, so that's good. And so the overall understanding seems to be there, but still need to work on a few little hiccups here and there to get this volatile market's bottoms and peaks a little bit more fine-tuned. It's difficult, obviously, to get every swing point, but obviously that's the goal of my model is to predict these, most of these swings. So what can you do in a volatile market? I mean, I'm learning myself that I need to probably close my positions much quicker when I'm in a very profitable stance. After 2-3 days, close my position and let the rest of the call play out. It seems that the model's able to get a good starting point, right? If I have to adjust a little bit here and there, that's understandable. But it seems to really do well at the start. At the beginning of the call, it seems to be making the trades profitable. And I think with such volatility going into mid-late March for the macro bottom, I need to learn to close my positions quicker when they're making decent amount of money, decent profit. So in a nutshell, that's what I'm learning right now. So thank you so much for your time, and hopefully you're enjoying the winding down of the year, and hopefully we have a great 2025, and hopefully you continue to see the value in my models, and I want to keep working hard for you and making sure that if I can learn something, if I can tweak my model a little bit better to make the pivots that much more crisp and clear and accurate, I will do my best. So thank you so much for watching my episodes. Please keep sharing my work. I do appreciate the subscriptions, and obviously my job is the accuracy, and if I can't keep up on the accuracy, if I make 3 or 4 or 5 videos that fail, I may have to step away. But I feel like as long as the markets continue to go sideways to lower into that March timeframe, I think I've done a good job of framing the overall picture. So from that standpoint, I feel like I think the macro prediction is solid, or has been holding, I should say. And as I try to learn how to do a little bit better on these mid-range shots, so trying to sync all these different models at the same time. So appreciate your patience, and hopefully it still provides value to you as I do all these things. Thank you so much. I'm Barry Schultz. Until next time, take care. So hopefully you've enjoyed my show today. Warning, this is all forecast use only. Come here. You want to read this for me? What does that say? Forecast.
Forecast.
Use
only.
Only. Right. And what's this say?
Warning.
Disclaimer.
I am not
a licensed investment professional. That's Latin. So say caveat emptor. Seek professional advice prior to investing. Investing bears risk
of
financial
loss.
Very good. And so basically this is saying if you ever try to invest in stocks or anything else, you could lose money. Warning, warning, warning. And all my graphs are subject to change. And not all the results are not always the same. Yeah. Thank you for reading for me.
You're welcome.
And that's it for today. I'm B.R. Schultz. Until next time, take care.